All right, ladies and gentlemen, we're back bringing you another tips video. In today's tips video, we're going to be going over gaps and imbalances. Well, just gaps, which I guess saying a gap is an imbalance. It's actually the best form of an imbalance. So let's just get this thing started. Today's tips video is going to be talking about gaps. And what is a gap? Well, I'm sure a lot of you guys have watched possibly other YouTube videos. Gaps happen in all sectors of the market. What we're trying to do here with supply and demand is identify if it's a novice gap or a professional gap. We're going to go over the two and say what's the difference. But first, we need to understand what are the two mistakes that novice traders are making in the market, or retail traders, as we could say. Novice traders, retail traders, same thing. All right, traders are losing money. All right, let's put it like that. So the two mistakes novice traders make is one, they buy or sell after a big rally in price or drop in price. So if they're buying after prices has gone up so far and then they start trying to get in, well, they're chasing the market, right? Same thing if it drops. If it drops really far, well, then they're chasing the drop after price has gone so far. And the other mistake that they make is buying in a supply zone and selling in a demand zone. Those are typically the two biggest mistakes that they make. Novice traders make. That's what I believe personally in the supply and demand methodology. You trade other methodologies, you can call me an idiot. It's all fine and dandy with me. I appreciate you clicking on this video and watching it till this point. But okay, let's talk about the two gaps now. Two types of gaps, as we covered before. There is novice traders and the professional, or the novice gap and the professional gap. Usually, what a novice gap is after prices has dropped or rise so much in price, it gaps in the same direction that prices has came from, usually in a trending market. So here, as we can see, right here, we kind of have like a novice gap and a professional gap here on the same picture. Here's one right here, and here's one down here. Okay, I'm back. I had a little interruption there. So I forgot where I left off, but I think what I was saying is like I said before, there's two gaps here that I have examples of. There's one right here, and there's one up here. So typically, let's talk about the novice gap first. This is a novice gap right here. Why? Because price is dropping or rising, potentially on depending on the trend direction of what it's going, but it's continuing the drop after prices has dropped already so far. So what they're doing here is they're chasing the market here when they're selling after a big drop in price or after price has gone so far up or down. It typically a novice gap is when it goes in the same direction that prices has been going in already. Usually this results in a reversal pattern as where trend starts to change and goes in the different direction in a reversal situation. A pro gap, on the other hand, is when prices have been going in a direction for some time and then it gaps in the opposite direction. So if we've been going in an uptrend like here from down, let's start from down here all the way up, prices have been typically going up. Most of us, I think, would say this is probably an uptrend. What happened here is prices gap down relatively high on this trend, giving it a pro gap. Ideally, we would want the gap to be up here. Why? Because we want it at the extreme, and I'm going to go through some other examples where I'm going to be like, hey, we'll see what happened here. This is typically what we're going to want, is when prices, and a professional gap is prices gapping down after prices have gone up so far, or we want it gapping up when prices have already been going down so far. I think I just screwed that up. So when we want it going, we want the gap down happening after prices have gone up to show us that it's a professional gap. Prices have gone so far and then it gaps all the way down. That's what we want for a professional gap. Or we can have it prices going down as a downtrend. So typically, say we're right here. Say after this big drop, prices were going all the way down, and then we got a gap up instead of a gap down. That would be a professional gap. That would give us the ability to take the pullback and buy the pullback. Now, ideally, we don't just go and just say professional gap buy here, professional gap sell here, novice gap, take the other side of the novice trade. Ideally, as supply and demand traders, we want to make sure this is lined up with higher time frame trades or higher time frame levels. You just don't go and take every single gap out there. I know I'm throwing a lot at you in the last 4 or 5 minutes, however long this video has been going on for, but I kind of break it down for you about about how to identify and typically how we want. So just a quick recap, a novice gap is going to happen after prices have gone down for so long or up, and then the gap happens after, or sorry, the gap happens in the same direction prices has been going previously. So if prices have just been going up in an uptrend, up, 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 and then it gaps up in the same direction of the trend, that is typically a novice gap, and usually we get a reversal pattern out of that. It's funny, as I'm doing this, I have my hands going up and I'm like making it sense. I'm like drawing it out with my hands. You guys can't see that though. But same thing when it drops. If prices have been going down, 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 and then we get it gaps down again after prices have clearly exhausted themselves, and then it gaps down, that's typically a novice gap also. And then a pro gap is typically when we want prices going, say up in a direction for so long and then it gaps down, or it goes, prices have been going down the entire time and then it gaps up in the reversal. Those are pullbacks that we want to be buying and selling at if it lines up with our supply and demand methodology. These gaps will happen every single week or potentially every day, depending what market you're in. If you're trading Forex, you're going to be getting them at least once a week by the Sunday open. You're trading stocks, you're going to get them every day. Same with futures. You're going to get them every day. So when this gap happens, here we are on this picture. Here we have a pro gap and a novice gap in the same picture. Let's talk about the pro gap. The pro gap is up here. Hopefully you guys can see that. There's a rally base drop and it removed this supply zone, so that's good. Why is it a pro gap? Because prices have been rallying all the way up for some time and then it gaps down. And it also removed the rally base rally. It gapped down after prices have rallied so much, telling us it's a professional gap. All right, so that would be a professional gap. And prices might have not just came back up into it, so not yet, not quite yet for that. So that would be a professional gap up there after prices have rallied up so much and then it drops in the opposite direction. And then here is an example of a novice gap. Here we gapped right here. After prices have been going down for so long and then it gaps in the same direction, that is a novice gap. See, it gapped and pulled back and reversed. It made those new levels, continued to go up higher. Usually it will remove that gap. It's a novice gap. Remember, novice gaps happen in the same direction that prices have previously been going in, and it gaps in the same direction after prices have gone so far. So those are typically one of the novice's mistakes. And remember, and obviously a pro gap is when trend has been going in the same direction and then it gaps the other way typically. All right, we're back. Lots of interruptions today while making this video. I'm gonna have lots of time to edit this now. Gotta grab my beer, gotta grab a new beer and edit this. Fresh one just to edit this. Gotta edit it like 4 or 5 times now. But that's it. That's pretty much wraps it up. Ideally, when we see these gaps, I want to be making sure they line up with supply and demand. Just because I see a novice gap doesn't mean I go and push the reversal button. I push go against the gap. I'll only take it if it lines up with supply and demand, and if I see an opportunity. Same thing with a professional gap. If I don't see the opportunity, like if this gap right here gaps down, I'm not just going to simply go back and just sell it. If it's not sitting in a higher time frame zone, then I'm not going to sell it. But this is the best imbalance. It's a fucking gap, for God's sake. It's a big gap. Not even really a big gap. It's a gap. It's the biggest representation of an imbalance. It's a big strong candle. It literally gapped in price, so that tells us that there was a lot of sellers in that area, but I typically won't take it unless there actually is its price is sitting in a higher time frame zone. All right, I'm back again. I get interrupted again. God damn it. It's going to take me like 45 minutes to edit this video. Make sure I'll grab a beer. But that's it. I think I pretty much covered everything. Let's just leave it like that. All right, cheers. Bye bye.